Morning, everybody. Welcome to Check the Market. How's everybody doing? Johnny, good morning. Alice, good morning. D&D Investments from Portland, Oregon, tuning in at, what time is it there? 5:13 in the morning?
I think they're 3 hours behind us.
6:13? Oh, that's not too bad.
Not too bad.
Good morning, Teresa. Welcome to Check the Market X, Check the News. The greatest collab since Louis Vuitton and Supreme. Jesse Roberge from Tacoma, Washington. Man, we got the West Coast in the house today. Welcome from Illinois. Thanks everybody for tuning in. Patrick, good morning to you. Make sure you share the broadcast. We're trying to put Fox Business out of business, except for Stuart Varney. I like him.
We'll bring him on. We'll hire him on after they fail. Yeah.
We'll bring Stuart Varney on once we put Fox Business and CNBC and Bloomberg out of business. Sherry from West Virginia. Tony can't spell financial either. Bill Bailey from Idaho. The best way to trade crypto, Uphold. Uphold or Qcoin. That's what I use. I use Coinbase for some of my stuff, and then Uphold for XRP. Akraka Tekena, good morning. From Peru, Illinois. Michael Frost. From Abuja, awesome, welcome. Nigeria in the house. Kansas City, awesome. All right, well, we got some more news today.
We got some news. There's always news.
What's going on?
I don't know. Let's check it. Home COVID test recall as FDA recommends throwing kits away.
How much they spend on those kits?
Seriously, and these things are taxpayer funded. Like, this is ridiculous. So this is the COVID-19 home test kit. Do we have additional slides for this? Here we go. The U.S. Food and Drug Administration has shared a recall for an at-home COVID-19 test after they were reportedly illegally imported into the country. SD Biosenor Inc., a South Korean diagnostics company, recalled a standard Q COVID-19 AG home test due to confirmed reports that the test kits were illegally imported into the United States, according to the recall notice posted on the FDA website. The tests are not authorized, cleared, or approved by the FDA for distribution or use in the U.S., according to the notice. The notice says that although there is no known distribution of the test directly to U.S. consumers, the manufacturer is issuing the recall out of an abundance of caution. In the unlikely event that consumers in the United States encounter the standard Q COVID-19 AG home test, they are encouraged to discard and avoid any use of the test as it has not been authorized, cleared, or approved by the FDA for the use in COVID-19 testing and diagnoses in the United States. Consumers have used the test are strongly encouraged to consider retesting with an FDA authorized or cleared test.
Yes.
As well as the recall.
Which they'll have to pay for.
Yes, exactly. They'll have to pay for this. Like the thing just goes on and on. It's just a complete nonsense after nonsense. But everything has to go through the FDA. Everything has to be regulated. And so now they're just telling people to throw away tests that could work, but are not approved. So nonetheless, let's move on. Truckers in California to protest at Super Bowl over school mask mandate. Read it. Before the LA Rams and Cincinnati Bengals, is it Bengals?
Bengals.
Bengals, it is Bengals. What a weird name. Clash at the 3:30 Pacific time tip-off during this year's Super Bowl. Protesters, seemingly organized by the USA Truck Convoy to mimic the Canadian convoy, plan to meet in front of the stadium to demonstrate against California's school mask mandate. This comes as California Governor Gavin Newsom directed the state's Department of Public Safety to lift its mandate that required vaccinated citizens to wear masks indoors, according to the Sacramento Bee, as the state has seen a 67% decline in COVID cases over the past 2 weeks, according to health data. The new rule, however, stopped short of lifting the mandate that requires children to mask up at school, sparking those in opposition to the directive to launch plans for a medical freedom protest, set to take place outside of LA's SoFi Stadium on Super Bowl February 13th. So we'll leave it there. But nonetheless, U.S. truck convoy is going to possibly be at the Super Bowl. I think that's probably an even better collaboration.
It is.
Not that it's mutual, but it'll be interesting to watch. Next. Peloton's problems aren't just Peloton's. The company's downfall could spell trouble for its peers. Peloton is spiraling, and its downfall could be a harbinger for real trouble for an entire industry. The at-home digital exercise company is one of several that thrived during the pandemic and promised to change forever how we work out. But now it's not clear if they'll be around to finish the at-home fitness revolution they started. There's no denying that the pandemic made working out of home extremely popular. After gyms were forced to close their doors, people canceled their memberships and invested in exercise equipment and online class subscriptions instead. I was one of those people. So much so that companies like Peloton couldn't keep up with demand, leaving many customers to wait months for their bikes and treadmills to be delivered. But COVID-19 restrictions didn't last forever. Eventually, when gyms started reopening, people stopped buying and using exercise equipment with the same enthusiasm they had in the spring of 2020. Next. This transition has been brutal for Peloton. Sales of new bikes have slumped and people haven't bought enough of the company's newer products, which include 2 treadmill models and weights to make up the difference. After losing $439 million last quarter, Peloton decided in January that it would temporarily halt production of its bikes and treadmills to cut costs, according to internal documents. Then on Tuesday, the company said that they would lay off 2,800 people, cancel its plans for a new $400 million factory in Ohio, and that its CEO, John Foley, would step down. Former Spotify CFO, Barry McCarthy, will take his place. Let's jump to the slide where we have the competitors jump into the game. Okay.
There we go.
There we go. As you know, 2021 has been a challenging year for digital fitness, Lululemon CEO Calvin McDonald told investors in December. We have seen increasing pressures on customer acquisition costs that are impacting the entire industry. Meanwhile, Nordic Track's parent company, iFit, announced that it would go public last September, but a month later it delayed the move, citing adverse market conditions. And Nautilus, which owns fitness brands like Bowflex and Schwinn, also reported late last year that some of its products hadn't been selling as well as they did earlier in the pandemic, though many are still more popular than they were back in 2019. It's possible that Peloton could find a path forward if a larger company acquires it, but there are reasons to believe that that won't happen, even with its new CEO. Some activist investors want a larger company to buy Peloton and have suggested that at least 19 possible candidates, including Apple, Netflix, and Lululemon. But these companies may not be interested in an expensive but niche fitness business. Apple, for instance, is already wary of buying more companies and catching the attention of antitrust regulations. Netflix isn't in the device business, and the streaming giant has generally avoided fitness content. Lululemon already has Mirror.
Which is pretty cool. Have you seen it?
I haven't seen it.
It's like
is it that thing where you stand literally in front of a mirror?
You stand in front of a mirror and they have like a trainer. I saw it at one of their stores.
Oh, really?
It's pretty cool.
I don't know if I would trust that.
So you can do like, I guess, yeah. I mean, with anything, there's privacy.
There's privacy
there's
concerns.
cameras in
It's
it and
creepy.
stuff like that. Yeah.
Like if it's in your room or if it's, I don't know.
Yeah.
It creeps me out. Nonetheless, something to watch. Competitors. If Peloton goes down, people like Peloton could also go down.
Yeah.
So, nonetheless, next. Breaking, the Emerson, Manitoba, Pembina, North Dakota border has been shut down until all mandates end. So this is the third border crossing between Canada and United States that has been shut down on both sides of the border. So let's roll this short clip. So now it's not just the truckers, but it's also farmers, which is interesting. So this is
heavy equipment there.
You can't move that. There's no way you can move that with a tow truck. Nothing's moving that. So interesting. All right, it's just a bunch of trucks and tractors, but we get the
They got the tow trucks on their side too, don't they?
They do. So in Ottawa, the truckers are there, and the city actually called in the tow truck companies, and they all called in that they had COVID. so they cannot come and tow away trucks.
Interesting.
And same with Calgary.
Just like the Prime Minister. All of a sudden, they all got COVID.
Everybody's getting COVID all of a sudden. Yeah. Anyway, let's go next. Herbert Hildebrand. This is a pastor who was charged and put in prison in Canada. He is at the Manitoba border. He says Canada border blockades. Coutts, Alberta closed. Windsor, Ontario bridge closed. Sarnia, Ontario westbound detour but open. Emerson, Manitoba closed. Fort Erie, Ontario closing Saturday. So on the weekends, we generally see a lot more people come out in support of the convoy, the Freedom Convoy in Canada. But this is happening on both sides of the border now. And then you also have this weekend, the US convoy starting up. So things are getting interesting every single day, more and more interesting. Next. Quebec Premier Legault admits that he will only lift the state of health emergency once the government adopts a new law, which would grant the government some emergency powers without having to use the emergency order. Let's go.
Dans votre calendrier, je pense que j'ai pas vu de levée d'état d'urgence sanitaire, M. Legault. Est-ce que je me trompe?
Oui, bien écoutez.
Est-ce que vous l'avez oublié?
Non, on ne l'a pas oublié. 14 mars, ça va être la fin de l'essentiel des mesures. Il va nous rester, dépendamment de ce qu'on fait avec les masques, ce qu'on fait avec le passeport vaccinal, ce qu'on fait avec les primes aux infirmières, il va rester des raisons d'utiliser l'urgence sanitaire, mais ce qu'on regarde, c'est pour déposer en mars un projet de loi qui viendrait encadrer justement ce besoin d'avoir des règles exceptionnelles. C'est pas notre objectif là de continuer à garder indéfiniment l'urgence sanitaire, mais comme vous le voyez, ne serait-ce que toutes les mesures qu'on va enlever d'ici 14 mars, il y en a beaucoup où ça nécessite l'urgence sanitaire. Il va en rester quelques-unes après, mais peut-être que c'est possible de les encadrer.
Nonetheless, many of the governments, Canada, US, UK, everywhere, are basically trying to maintain their level of authority that they were granted themselves under these emergency orders. So different governments are going to try and maintain that level, that authoritarian level, but it's going to be pretty difficult, I think, to push through on a state or on a provincial level. But it's something to watch nonetheless.
People have had enough.
People are done.
They're done with it.
They're so done. Even people who are pro-lockdown, like pro-mandate, they're done.
Yeah.
Like you can't keep going with this charade.
It's over. It's been what, 5 years now, 10 years?
It feels like it. It also, at the same time, it also feels like it's just one big year.
One long year.
And it's just never ended. So, such is life. Do we have one more?
Awesome.
Scientists in Hungary examining a unique variant of COVID-19 have discovered genetic material that suggests the strain was being examined in a Chinese lab, bolstering the lab leak theory. So you can read that on your own time. It is an interesting lead that I think most people need to be picking up on but aren't. So there you go.
All right. Well, we got 3 minutes till markets open. Futures are down, mainly due to the CPI numbers that came out this morning. So let's start with that. We can start with this. Pelosi wants any stock trading to be banned to be government-wide. Pelosi called out the Supreme Court of having no reporting of stock transactions. So she's sad because this is her livelihood. Continue.
I'm sure a lot of Republicans are quite sad about this too.
Yeah, I'm sure.
I'm sure everybody's just down in the mouth.
House Speaker Nancy Pelosi, they'll find a way around it.
They will, always do.
Said Wednesday the House is making progress on legislation to curb stock tradings in Congress, but added that she's insisting any stock legislation apply to the Supreme Court too. It has to be government-wide, Pelosi said Wednesday, of the criteria she wants to see in any stock legislation. The third branch of government, the judiciary, has no reporting. Pelosi added at a Capitol News conference, the Supreme Court has no disclosure, it has no reporting of stock transactions, and it makes important decisions every day. So she's basically calling them out, saying that the Supreme Court trades. Pelosi, who has once opposed a ban on stock trades for members of Congress, said it has said in recent weeks She is open to restrictions if members want such legislation. She signaled last month she has concerns about the Supreme Court not having to disclose stocks as lawmakers must do now, but her comments Wednesday indicate her demands in shaping the legislation. Continue. Pelosi also said she wants an increase in fines for violations of the current Stock Act to serve as a better deterrent. That's probably what's going to end up happening. I don't think they're going to ban it outright. I think there's just going to be like, well, we'll just put more fines in. Under the Stock Act passed in 2012, it's illegal for members of Congress and their families to profit from inside information, and it requires lawmakers to report stock trades to Congress within 45 days. In some recent cases, lawmakers have failed to report their trades altogether. The discussion comes as members of the House and Senate are pushing a range of bipartisan proposals on how to stop members from trading individual stocks. The effort kicked off following reports that senators from both parties traded healthcare stocks in the early days of the pandemic after they received closed-door briefings about COVID-19. It's unclear how far the House legislation will go and whether it'll affect spouses. Pelosi doesn't trade stocks herself, but her husband Paul does. He's the owner and operator of a San Francisco investment firm that has helped the Pelosis amass enormous wealth. Continue. Pelosi is worth an estimated $114 million, according to her 2018 personal financial disclosure, making her the 6th richest member of the House and the 10th richest member of Congress, according to data tracked by the Center for Responsive Politics. Pelosi said, and the market's open. And there we go. Now it refreshed. S&P down 54, 1.25%. NASDAQ down almost 2%, down 284, and the Dow Jones is down 258, mainly due to the CPI numbers that came out that were worse than expected. Do we have that article about the CPI numbers? Okay. There we go. Inflation rises 7.5% over the past year, even more than expected, and the highest since 1982. Consumer prices in January surged more than expected over the past 12 months, indicating a worsening outlook for inflation and cementing the likelihood of a substantial interest rate hikes this year. The Consumer Price Index, which measures the cost of dozens of everyday consumer goods, rose 7.5% compared to a year ago, the Labor Department reported Thursday. That compared to Dow Jones estimates of 7.2% for the closely watched inflation gauge. It was the highest reading since February of 1982. Stripping out volatile gas and grocery costs, the CPI increased 6% compared to the estimate of 5.9%. The monthly rates also came in hotter than expected, with headline and core CPI both rising 0.6% compared to the estimates for a 0.4% increase on both measures. Core inflation rose at its fastest level since August 1982. Continue. Stock market futures declined following the report, while government bond yields rose sharply. The benchmark 10-year Treasury note most recently yielded 1.97%. On a percentage basis, fuel oil rose the most in January, surging 9.5%. As part of a 46.5% year-over-year increase, energy costs overall were up 0.9% for the month and 27% for the year. Incredible. Vehicle costs, which have been one of the biggest inflation contributors since it began surging higher in the spring of 21, were flat for new models and up 1.5% for used cars and trucks in January. The two categories have posted competitive increases of 12.2% and 40.5% over the past 12 months. Thanks, Joe Byron. Shelter costs, which make up about 1/3 of the total CPI number, increased 0.3% on the month, which is the smallest gain since August 21 and slightly below December's increase. Still, the category is up 4.4% over the past year and could keep inflation readings elevated in the future. Food costs jumped 0.9% for the month and are up 7% year over year. The burst in inflation has muted the sizable earnings growth workers have seen. Real wage hourly earnings rose just 0.1% on the month, as the 0.7% monthly gain in wages was almost completely wiped out by the 0.6% inflation gain. So that's CPI. That's why the market's down. NASDAQ down 259, the Dow Jones down 234, and the S&P down 49. Next. Binance, led by the world's richest crypto billionaire, is taking a $200 million stake in Forbes. Crypto taken over, crypto island taken over. It's going to be crypto continent soon. Binance, the world's biggest cryptocurrency exchange, is making a $200 million strategic investment in Forbes, the 104-year-old magazine and digital publisher. CNBC has learned the funds will help Forbes execute on its plan to merge with a publicly traded special purpose acquisition company in the first quarter, according to people with knowledge of the deal. Continue. Investors have grown skeptical of SPAC deals generally and media deals in particular. In recent months, amid the broader stock market retrenchment, Binance will replace half of the $400 million in commitments from institutional investors announced by Forbes in August, said the people who declined to be identified before the transaction is announced. That will make Binance one of the top 2 biggest owners of Forbes, which will be listed on the New York Stock Exchange under the ticker symbol FRBS. The people said the crypto company will also get 2 directors out of the 9 total board seats. So cryptocurrency, buying up newspapers, that's how we do on Crypto Island. We buy everything. Continue. We can keep going. We can go to the next one. White House rolls out $5 billion funding plan to states for electric vehicle chargers. Could that be good news for electric vehicle charging companies like Blink and others? The Biden administration this week rolled out a plan to allocate $5 billion to states to fund electric vehicle chargers over 5 years as part of the bipartisan infrastructure package that includes $7.5 billion to build a sprawling network of EV charging stations across the country. The investment is part of the administration's broader agenda to combat human-caused climate change and advance the clean energy transition. The Biden administration has touted EVs as more affordable for Americans than gas-powered cars. Are they?
No.
And has pledged that half of the vehicles sold in the U.S. will be electric or plug-in hybrids by 2030. These people need to get out. Like, just get out in the world and just buy a car. Just buy any car. Go down to the Chevy dealership. Tell them I want to see a Malibu, if they still make them, or an Impala, or whatever. And then what's Chevy's electric vehicle called? The Volt. Because I'm pretty sure they're very similar in price. The Volt might actually be more. And then replace the battery at some point. See how you like that. Continue. Disney Q1 earnings highlights. Park segment up 100%. So everybody likes to have some fun, do some roller coaster rides. So Disney has had stellar earnings. Walt Disney reported fiscal first quarter financial results after market close Wednesday. Here are the key details. Disney reported first quarter revenue of $21.8 billion, up 34%. That is a huge beat. Congratulations, year over year, and ahead of a consensus estimate of $18.6 billion. Disney reported earnings per share of $1.06, handily beating the 61 cents per share estimate. What's Disney trading at right now? They're up 5.81% to $155 per share. Still way down from their 52-week high of 203. So is this going to give Disney the boost, the stock boost it needs to get back to the 200 range? The company saw its media and entertainment segment hit revenue of $14.6 billion, up 15% year over year. The company's parks, experiences, and resorts segment had revenue of $7.2 billion, up over 100% year over year. This marked the second consecutive quarter of the parks, experiences, and resorts segment having revenue growth of 99% or more on a year over year basis. And it just shows that people want to get out. They don't want to sit at home anymore.
Well, and also ESPN just came out. It was exposed by Project Veritas, and ESPN is owned by Disney.
Yeah.
And there's a bunch of kerfluffling going on there with regards to racism and misogyny within the company, but also the misinformation that they're intentionally promoting.
Yeah.
So that was just exposed, I believe, yesterday.
I didn't see that.
Yeah. So it'll be interesting to see how that affects
the stock
everything
Disney,
going
yeah.
on. Yeah. Good stuff.
Keep going. Domestic parks and experiences revenues increased to $4.8 billion in the quarter compared to $1.5 billion in the same period last year. So they're obviously not social distancing. Disney reported a non-cash loss of $432 million in fair value of its stake in DraftKings in the quarter. We've had a very strong start to the fiscal year with a significant rise in earnings per share, record revenue, and so on and so forth. Oh, and Encanto and all those other things that they did. So they had increase in total subscriptions across the streaming portfolio. So there we go. That's Disney. What else we got?
See the offspring of Lucifer. Look how he ate that slap like an animal cracker. Time to return to sender. Satan, you will never win. Satan, you cannot win. See his eyes. Jesus is Lord! That slap returned him to factory settings. That slap made him a born-again Christian ready to be baptized. He went home and applied for Chick-fil-A immediately.
So there,
That was fantastic.
there we have some humor on a down day in the market. Next, inverse Kramer, inverse Kathy, follow Pelosi the whale. That's right. Making stock moves like a boss. I'm sure she'll figure out how to get out of all this. She might just retire. If she can't trade stocks anymore, she's done. She's like, you know what? I'm just going to go back to San Francisco and do my insider trading there.
Fair enough.
Continue. No, it doesn't affect my baby 12 years later. Wall Street bets. Oh, man.
Oh, wow.
All right, next. We already had that one. We had that one too. California agency sues Tesla over alleged discrimination and harassment. Per the Wall Street Journal, let's see it. A California state agency on Wednesday filed a lawsuit accusing Tesla of tolerating discrimination against black workers at an assembly plant, mirroring claims in several other pending cases against the electric car maker, the Wall Street Journal reported. California's Department of Fair Employment and Housing filed a lawsuit in state court which targets alleged workplace issues at Tesla's Fremont factory. The agency found evidence that the factory is a racially segregated workplace where black workers are subjected to racial slurs and discriminated against in job assignments, discipline, pay, creating a hostile work environment, the report said, citing a statement by DFEH Director Kevin Kish. Continue. Tesla had on Wednesday said that DFEH was planning to file a lawsuit against the company alleging systematic racial discrimination and harassment. The company had said it would ask the court to pause the case once the state's civil rights regulator filed its lawsuit. Here's the kicker. Despite several requests, Tesla said the regulator declined to provide the company with the specific allegations or the factual basis for its lawsuit. Tesla and the DFEH did not immediately respond to Reuters' request for comment. So, when I saw this, my first thought was, well, Tesla just moved their headquarters to Texas.
They did.
So I wonder if this has something to do
Someone's
with it.
throwing
If
a fit.
California is like, you know what? If you do this, we'll just
hissy.
bog you down in lawsuits, because that's what they do.
Hissy fit.
They'll bog you down in lawsuits. So we'll see what happens there. But my guess is that'll probably come to nothing. All right, let's go over some stocks to research. So I took a look at some of the stocks that you all wanted me to take a look at yesterday. So I was able to research two of the companies. The first one is Bubbler, BUBBLR, and the ticker symbol is BBLR. This company has a proprietary technology that will allow users to use the internet without being tracked by ad companies. Some sort of proprietary IP something. Their goal is to decentralize people's internet information and profits from that information. The only reason Google is the large company it is today is due to ad revenue from selling your information to companies and customizing ads. So this company is looking to stop that behavior by internet companies. This is an over-the-counter listed company. It's OTC, so you can't trade it on Robinhood or Cash App. It has to be on like a trading platform like TD Ameritrade, Fidelity, etc. They've currently raised about $4.5 million. So this is still a very small company. They're launching their product in Q2 of this year and are targeting $20 million in funds raised, as well as a NASDAQ listing. This is currently very high risk, but could potentially be high reward if their product gains ground. People are more and more concerned about their privacy online, and so this company could take advantage of some of those concerns. Their financials do not look the best, but it is a very young startup company. It just started in 2015. So take a look at it if it's something you'd like to invest in. BBLR is the ticker symbol. And you can take a look at the company at bubbler.com, bubbler.com. If you're interested in a very young company to invest, get in on the ground floor there. Another high-risk company is Baytex Energy Corp, is one that I was asked to look into. The ticker symbol is BTEGF. This is a Canadian energy company. It's another OTC stock, so it can't be traded on Robinhood or Cash App. Baytex Energy is a Canadian energy company that's engaged in the acquisition, development, and production of crude oil and natural gas in Western Canada and the United States. It has momentum to the upside, so it's gone from about 70 cents a share to over $4 a share recently. I think it's back down to like $3.85 as of when I last checked this morning. With the continued rise in oil and gas prices, a lot of these companies have been doing very well. And there's a lot of like mergers and acquisitions coming down the pipeline, things like that with these companies. At oil over $90 a barrel, they make a significant amount of profit with all the shale oil and gas that they're drilling for, or even the oil sands. They have a good amount of natural resource assets. They do have quite a lot of debt, but overall not too bad for a small oil company. And by small, I mean over $1 billion. There's nothing really that would keep me from investing in this company that I saw. Take a look at it if you'd like to add some high-risk energy companies to your portfolio. So that's BTEGF, Baytex Energy Corp, and Bubbler, BBLR. Those are the two we have for today. I'm going to take a look at some of the other ones you just suggested, and I'll get back to you on those. We've got time for one or two questions before we end today's broadcast. If anybody has any questions, make sure that you have a trading plan for this year. Make sure that you have entry point, exit points. How much of your portfolio are you allocating? So how much of your portfolio are you allocating to a single stock? Make sure you have all that planned out. I usually like to spend no more than 5% of my total portfolio into one single stock. So make sure you come up with an investment plan when you invest in stocks, so you have an exit point and an entry point.
Here's a question. Do you expect Tesla to continue its stock price growth when its market share keeps dropping?
Tesla's a darling company. It's one of those, there's a lot of hype around. So I think that they're still going to keep, their stock price is going to, grow. Yeah, because all the other car companies aren't like as attractive as Tesla, because Tesla's constantly in the news. You don't hear about, all the other car companies. So there's not a lot of news, and out of sight, out of mind.
Exactly.
For a lot of retail investors.
That's fair.
If you would like to invest in Revival today, we'll give you a chance to do that now. There's the ways to give. And as a thank you, we'll send you our the little book that still beats the market. If you can put that picture up, by Joel Greenblatt. He is a successful hedge fund investor. So if you'd like to get that book, we'll send that to you as a thank you for investing in Revival Today and everything that we do. And there's the ways to give on the screen for you. Hashtag donate on Facebook. You can text RT. Cash App, Venmo, cryptocurrency. And you can also send us a check, P.O. Box 7, Revival Day, P.O. Box 7, Prosperity, Pennsylvania, 15329. And then don't forget to claim your offer. All right, that's it from us today here at Check the Market X Check the News. We'll be back with you again tomorrow. Have a great day, everybody. And we'll see you tomorrow. Go out there and make some money today. See ya.